Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Watching Market Today on Business Today Television. I'm Sakshi Batra. This is a show where we help you understand the last half an hour, 45 minutes of trade and how do you navigate your last hour moves as well. And with us will be two very special guests to help us navigate through this time and help us pick out some of the stocks that you can keep an eye out on. Joining us is Soni Patnaik, AVP Derivatives Research, JM Financials. Also joining us is Sharad Awasthi, Head of Research at Smiths. Both of you, welcome and good afternoon to you. Thank you so much for taking the time out for this discussion. Well, the good part is that the Nifty has been able to sustain the bounce that we've been able to see, especially on a day which is a weekly expiry session for the Nifty. And this bounce largely has to do with the global cues that turned positive overnight and in the early morning trading session. And the entire market seems to be moving forward and recovering from the volatile moves that we've been seeing over the last few trading sessions. So the Nifty hovering around 22,000 odd levels. The Nifty Bank is up and about in trade as well. We can see about a 0.7% move. What's even better is that the broader markets are also pulling up very, very smartly, with the small cap 100 index having recovered a very smart move. 2.2% of a move is what you can see. So both the mid and the small cap indices are actually trading at the day's high point, and all the sectors are actually inching higher, with the realty space as the top moving sectoral index up 3% in trade, followed by metals, PSU banks, autos. They're all driving in a faster lane today. Top movers on the index: BPCL, NTPC, Tata Steel, Power Grid, Coal India and IndusInd Bank. Let me begin by understanding from you, Soni, first. How do you see the market setup now, changing over the last few trading sessions? We were seeing extreme volatility. Supports were shifting lower, and again the concerns were emerging as to how much more downside could it be there. Now the question shifts to, is this bounce going to be sustainable? What is your own sense?
Hi, good afternoon, Sakshi. Thank you so much for having me on the show. See, if we talk about Nifty, it's hovering around that 22,000 mark, and today's high was somewhere around the resistance of 22,100. So we believe that as long as that resistance of 22,100, 22,200 range is not crossed, maybe there could not be any trend reversal. It's too early to say as of now, but on the downside, 21,700 should act as an immediate support. So anywhere between this range, maybe you'll see a lot of consolidation until further data adds up, and starting from tomorrow will be very important, because rollovers are going to start from tomorrow. So I think either way, of either side of the range has to move. Either above 22,200, we can see further again retesting all-time highs, or anywhere below 21,700, and we can see Nifty getting into corrective mode. I think it's just important, and right now it's more of a sideways to consolidation mode for Nifty.
Okay, let me also get Mr. Awasthi's word here. How are you seeing the market setup now change after the big US Fed event is now behind us? As the Nifty bulls would have expected to hear, rate cuts are finally coming in, and in 2024, and 3 rate cuts is what we are hearing from the US Fed. Do you see that really changing the sentiment for the domestic markets now?
I don't think there will be a material shift. This is something they have been going on for quite some time now. Unless and until we start seeing real impact on the ground where rate cuts start, I believe the Swiss National Bank has already started with the rate cut procedure today. But till such time that you start seeing it in US and Europe, particularly more in US, I think most people would like to wait and see as to final outcome when the interest rate cut usually happens. They have been speaking about it, but the inflation trajectory, etc., in the US has also been pretty volatile. And even the labor markets and the numbers that are coming out of the broader economy have not been very stable. I think next quarter onwards, largely globally, we will be seeing a normalized base for most of the macroeconomic as well as quarterly numbers. So I think that will give you a much better picture. So unless and until the rate cut really starts, I don't think a one-day kind of cheer is good enough. But I don't think it's a sustainable thing where you will be very positive I think largely the domestic side of the market would be driven by what would happen on the domestic side and a pre-election uncertainty with a lot of whiplashing here and there is quite normally to be seen. And I think that could be something that could unnerve a bit of sentiment on the markets.
Okay. Sony, let me get your two stock ideas and then we can discuss what's moving in the markets, what's buzzing, and your views on those. But your top two trades?
Sakshi, the first would be in Bajaj Auto, very strong. We've seen, above 8,500, very strong support. And going further, it can test 9,000 plus levels. I think Bajaj Auto from current level also stands as a very strong buy. You can keep your stop losses at 8,600 for a positional trade and, for targets of 9,000. So that is the first pick. The second pick would be in Tata Power. Tata Power, we've seen a very strong move today. There's a good breakout, even in option chain data. There's very aggressive put writing at 390 put, which is like absolutely near and very close. So I think 390, 385 range is going to act as a very strong support. So 385 can be the stop loss and target of 410 can be looked at.
Okay, Tata Power and Bajaj Auto, two top trading ideas that you can continue to look at where Sony is bullish on. Mr. Vasti, would you also like to share a few names that you may have spotted in the recent, volatile move and consolidated move in the market that we have seen?
I think RHI Magnesita or RHIM is a company that we have been looking at. I think it's a decent bet. They're into refractories largely for the steel side of the business. These are special refractories. They've also diversified with two recent acquisitions, which were worth around 2,300 crores. They still have around 30-35% surplus capacity that they can rake up over the next, 1.5 to 2.5 years. And I think the numbers have scope to improve substantially from current levels. So I think that is one idea we are looking at. It's corrected substantially from the highs. Looking at targets of somewhere around 800 plus on the stock with a 20-25 kind of multiple. So I think RHI Magnesita would be one, something on the smaller side. I think Heikel could be one company which I'm bullish on. I think the margin erosion that they've seen on the pharma side of the business, that should gradually get arrested with China supplies normalizing. And the recent expansions that they have done, the capex, I believe, over the last 1.5, 2 years has been around 700, 800 crores. The benefits of that are still to accrue on the business. They are looking at launching one or two new products in new geographies. And I think all this should culminate into very good earnings for the company. So there we are looking at targets of somewhere around 350, 375, issue 2025 kind of multiples.
So with the second stock, I failed to get the name where you're giving the target of 350, 375. Which is that stock?
Heikel.
Heikel Pharma. Okay, okay. Got that. So, all right. So, it's RHI Magnesita and Heikel Pharma that you're looking at. Fair enough. Let me just get some momentum stocks and ask Sony to give us her views on those, the top stocks in the F&O basket. Of course, REC, PFC, that's where all the action is and they're coming back in flavor. How are you looking at these two power-packed performers?
I think, Sakshi, we can see that they are definitely reversing, but then there's no such signs that, it can head further high. I think it's just wise to sort of wait out. If we talk about REC, then 460 is an immediate resistance and support is around 420. So the risk reward ratio is also not very favorable to enter at current levels. Perhaps if it's able to cross 460, then you can see a further upside up to 490, 500 levels. Very important, just wait out for the levels of resistance to cross in terms of.
Okay, got that. Let me also ask you, Sony, on the Realty pack that has been buzzing, especially stocks like Sobha, which have rallied 12% in trade. How are you looking at this fresh move and any particular stocks from the Realty space that interest you?
Definitely, I think Sobha, if you just look at, it's looking quite strong. It has given a good breakout of the last 4 days of consolidation. It was facing a resistance around 1320. It's crossed that level comfortably. It looks to be closing above that resistance. Going forward, Sobha can test 1500, 1530 odd levels. However, if we have to pick the best, the stock that is looking quite strong from current levels in the entire pack is Godrej Properties. It has given a recent breakout of above 2,200 in option chains. I think Godrej Property risk reward ratio is also quite favorable to keep a stop loss of around 2160 and then a target of 2,300, 2,320. So this stock can definitely outperform.
Okay. The other space that's come back after a long haul is the capital markets related stocks. So Bombay Stock Exchange led the move here, especially after the brokerage houses upgrade on the stock. It moved up 10.5%. So double digit returns coming in on BSE. You have CDSL that's been moving up, MOFSL that's been moving up as well. Any particular trade here that you would like to track for sustaining move? Sony?
Yeah, sorry, I think I just got caught up. So in this particular stock,
Okay, I think there is a connection issue. Let me toss this question to Mr. Awasthi. Mr. Awasthi, what do you think is behind this strong move that's coming in on the capital market majors, and is this a space that long-term investors should be tracking closely?
Yeah, I think on the exchange side, I believe the valuations are not really comfortable, whether you look at any of the exchanges, MCX or even BSE. The logic is that the options volume would continue to improve over the long term. I think, yeah, in the initial catch-up phase, they've played up very well, and most probably options are a flavor of the markets, even on the NSE, so BSE will also play out on that. But I think, again, considering that to be a linear equation and everything working out in sync, I don't think that's a possibility. 1 year forward, it's already trading at 140 times. So I don't think there's much scope on the exchange side of the business. CDSL, etc., I think the number of demat additions have been smart. If there is some regulation regarding the insurance part, etc., that could be other kickers for them. So there you have some kickers which could substantially elevate the numbers going forward. But considering a status quo from current levels, I think either of them don't really warrant such upside from these.
Okay, fair enough. What we'll do, viewers, is we'll take a very quick break. When we return, we will continue to discuss more stock sectors and opportunities where you can continue to buy into in the current market space with Mr. Awasthi. Stay with us.
Darwin Platform Group of Companies, fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
All right, welcome back to all our viewers. You're watching Market Today on Business Today Television. I'm Sakshi and I'm in conversation with Mr. Sharad Awasthi from Smiths, who's guiding us to find out where can you look for opportunities and profitable trades in the markets now. Mr. Awasthi, let me talk to you about the space that actually got the entire markets into a corrective mode, and that's the mid and the small cap space. Quite a bit of correction played out. Small caps corrected about 15% odd from their peak as well. But there's a sharp bounce today, 2.5% odd move coming in. Of course, they were on the recovery path for the last 2 or 3 trading sessions. But do you think the damage, whatever had to be done, is done largely? And now again, one can look at fresh, or do you still feel that this space is overheated? How would you advise fresh investors?
No, I think the small caps, what they corrected around 14-15% from the highs. The lows, I think they were down 15%. The mid caps were down around 7-8%. And this is at the index level. Individual levels, the stock had corrected even sharper. So I think this is a much larger space. So you need to take a decisive call on which companies you want to bet on rather than go across the board. You have a flavor of everything, something going up abnormally, something not having any numbers in support, and something still trading at attractive valuations. So you have this whole bunch available in the small cap, mid cap space because it is a much larger space vis-a-vis the large cap, 100, 150 stocks. So I think you need to pick and choose what you want to play on within the space. I don't think it's an across the board expensive or exorbitant valuations, but yeah, there were pockets of froth that had problems. And there are pockets that still have problems. We spoke about the exchange stocks that are trading at abnormal valuations. There are some metal stocks which are trading at abnormal valuations. So I think it's not across the board, but yeah, I think a major part of the correction might be over. We are seeing a strong pullback. If you are a short-term trader, I think it does make sense to again book your profits and sit out for some time and maybe buy even lower. But I think long-term players who have picked up the stocks well, you are waiting for ideas of 2 to 3 years. I think it does make sense to pick and choose your stocks and stay in them.
Okay, so which are the sectors that you are now getting incrementally bullish on? Of course, we are now approaching the big political event, and of course, the conversations will take center stage as far as elections are concerned. Are there any sectors that you are identifying now, or would you wait until beyond the elections to now seriously deploy fresh money, sir?
Yeah, I think as I told you, it's more of a bottom-up approach rather than a top-down approach in the current market scenario. If you ask for a sector where I see valuation comfort, I think maybe paper stocks would be one where you have some comfort in terms of valuation. So I think with the margin of safety would be high there. But the share cover, the segment has its own challenges. But I think that as a whole segment, whether you consider a West Coast paper, JKK paper, or a Tamil Nadu paper, that could be one place you could look at. Chemicals, agrochemicals particularly, I'm very bullish. I think the valuations at which you are getting UPL once the turnaround starts to happen, that could even turn out to be a very strong story for you in the long term. So I think these are the two segments that you can pop out of basically based on the theory that there is a high margin of safety. So most probably the
Okay.
drawdowns are much lesser.
Okay, so paper stocks is where you can still look for value. Some of the names already pointed out by Mr. Avasi right there. Any particular stocks where you do feel that investors must stay away from, and there is still a lot of overheating despite the kind of correction that we've seen play out over the last 2 weeks?
Yeah, I think stocks like a Zomato, maybe I am not comfortable with the valuation. So the turnaround is fantastic. The way they have turned around Blinkit and the type of projections they're talking about, it could be very fantastic. But in terms of numbers, I mean, in valuations, I cannot really find faith in the fact that you're buying something at these valuations. Most probably, it's better to wait out and buy them at a correction when the market corrects and there is despair. Then you better buy these stories for the long term. Because I don't think at buying at these prices you would be making money over the next 3 to 4 years. If you have 8 to 10 year horizon, that's a different ball game. Similarly, I told you for the exchange related stocks, whether a BSE or an MCX, I think these valuations are not normal. Uh, Ideally, in the long term, they would be growing at 15-20%. So at max, you could be giving them 30 times forward, maybe. So I think giving them 50, 60 times forward is a bit obnoxious in terms of valuation.
Okay. What about the metal space that's been really shining bright in trade today? So, be it the public sector names like Nalco, SAIL, Hind Copper, they are moving up. The private sector names like Tata Steel, they've been doing very well as well. What is your own sense of what is really happening? Because this space is considered pretty cyclical. And do you still feel just cyclicality factor playing out over here, or is there a structural move that one should track?
No, I don't think there is a structural move. It's largely based on the China impetus that is happening. We keep hearing about a Chinese recovery or a recovery in the real
Yeah.
estate in China. Even today, they have come out with some announcements that most probably they will do some relaxations on the banking side to give an impetus to the economy. And as we all know, metals, China remains a strong behemoth. So anytime some announcement comes out of there, the hope rally plays out where you expect the Chinese revival to happen. That would obviously bolster demand for most metals. But I think the valuations at which they are trading, most of them are trading at 11, 12 times forward, and not much of earnings growth is expected over the next, 1.5, 2 years. So I don't think at these valuations they are going to sustain. On and off such small rallies will happen. Some individual stories does very well broadly. That's a different story. But most of the names that you mentioned are well covered names, and I don't see a lot of earnings upgrade happening in most of these stocks. And with steady earnings, I think the valuations are already 12, 13x. Hindustan Copper, I cannot understand the valuations are totally out of whack. So I think
Okay.
most of the valuations seem a bit exorbitant right now. It's better you stay out. If you are a trader, you want to trade short term in terms of the event only and some sentiment boost from China. That's a different deal. But I don't think there is sustainable growth in these companies from here on.
Okay, fair enough. What about PSU banks and the entire PSU basket too? If you could just take these two separately and tell us how are you positioned here. PSU stocks, we did see many of them correct 30-40% as well. Are some of them giving you a fresh entry point at this point in time from the larger PSU basket? And how do you see PSU banks that continue to move up higher?
Across the PSU basket, I would not suggest buying yet unless and until you have a very convincing story somewhere. BML is one story where I have a lot of conviction. So that is one story I'm looking at. But if you look at across the board, I think you can categorize it into three, four categories. PSU banks you have already separated. The rest remains railways, defense, and maybe partly, the NBFCs or the oil and gas companies, basically OMCs, etc. So I think OMCs have their own fair bit of challenge. A lot of tailwinds have turned into headwinds, whether it's Russian crude, whether it's some sanctions coming out of Venezuela, whether it's higher oil prices, even gas prices are going up globally. So particularly in the US. So I think these are all challenges that are there for these companies. And I think on the other side, while for oil and gas, maybe 1 year down the line, most of them were attractive at these valuations. Higher oil prices may affect them positively, particularly ONGC and oil. The valuations might not be very expensive, but they are nearly fairly valued. Rest of the PSU on the railway and defense side, I think most of them are fairly valued unless and until the order accretion happens at a very fast clip. Though the market reaction is even on a 200, 300 crore order, you have a 5-6% move on most of these stocks. But I think now it becomes a bit more optimistic. If you are a very optimistic kind of guy who wants to play out through the rally, that's okay. But I think at these valuations, most of these stocks do not offer much scope for up move at the current numbers unless and until a strong revival hope happens in terms of fresh orders being large enough. So I don't think that's happening anytime soon. So most of the PSUs I would avoid. Regarding PSU banks also, I think again it's the same story unless and until a strong recovery happens out of the return of assets. I don't see much scope happening because most of them are trading at what 1.2, 1.3 times price to book now. And not that the numbers will be very rosy going ahead unless and until the recovery part plays well. So I think normal growth expecting, you don't expect a lot of re-rating happening in these companies. So barring SBI on the PSU bank side, I would not be betting on anything else.
Okay, let's quickly look at stocks that are hitting a 52-week high today. So, Juniper Hotels, that's 6.5% higher, 506. Thermax is up in trade about 5%, 38.63. That's at a 52-week high. You have CG Power, that's up 8% at 542. So that's at a 52-week high again. Hitachi Energy, that's another one at about 7% higher at 7,111. That also is moving up. Anything from this basket of 52-week high stocks, sir, and that you can look at and tell us in case you're positive on any of the stories?
Uh, I think Hitachi and CG Power are very good long-term stories. Some time back, most probably the Hitachi International management had also come on board and given very robust outlook on what they want to do with the India business. I think if you are looking at a 4 to 5 year kind of horizon, because the stock is already run up a bit, so I think for these events to materialize, you will need that kind of time frame. Same for CG Power. Semiconductor business that they're getting into. I believe they inaugurated it some time back, start with. So I think once that starts rolling in, that could be a multi-bagger kind of story. So these are both ideas which I think if you can hold on for the long term could be multi-bagger stories. Though both in terms of traditional valuation metrics might not look very good, but they are long-term stories that are very much intact. Even for Hitachi, most of the businesses they are into, I think they are very forward-looking, future-oriented businesses that should do very well in the long term. So Hitachi and CG Power as good long-term bets, multi-bagger bets basically.
Okay, multi-bagger stocks, if you're looking at, look at these two stocks, CG Power and Hitachi Energy for the extreme long term, and these stories can definitely give you multi-bagger returns. That's the conviction coming in from Mr. Avasti. The other gains are, in double digits. Engineers India is moving strongly today, 13% higher, 195 odd levels can be seen on that one. Sobha, I've already mentioned, it's 12% higher. Action Construction is up 10% in trade at 1405. We've already discussed BSC. IRB Infra, of course, after that brokerage house upgrade, is now hovering 10% higher. It's holding on to that momentum that it saw right in the opening trade as well. Anything from these names that interest you, sir?
Yeah, I think Engineers India is a good name to have on your list. I think most of the engineering companies right now are trading at what 30, 35 times, 40 times. Engineers India is still, we are expecting what, 10, 11 rupees kind of earnings in 2026, regular growth of around 20-25%. I believe the cash position is also pretty strong on the counter. So I think if it reports around, 9, 10 rupees, even if it trades at 20-25 times, you could be looking at something, 250 to 60 on the stock over 1.5 year kind of horizon.
Okay. The other stock that I wanted to discuss with you is Avenue Supermarts. Once an investor's darling, this retail space has not been doing very well over the last few months odd or so. The consumption story has been dwindling, but CLSA has now initiated a buy with a target price of 5,100 on the stock. That straight away gives investors a 1,000 point of an uptick, 1,000 rupee of a benefit. How would you really look at the retail story changing and that impacting such retail majors?
See, I think the retail story is again picking up in pockets. If you look at trend, the Zudio experiment played out very well, while the total branded apparels are not doing as well as they were expected to do. So I think it's a place where a lot of change happens at a very fast clip. The Gen Z or the younger generation basically is much faster in terms of changing and adapting to new fashion trends and everything. And this space, retail has already always been a space where you need to adapt to the fast changing demand environment of customers. So I think it will be challenging. DMart is in a different kind of mood actually, and they have largely been sellers to the wholesalers basically. So I think it's more than the retail mom and pop store. It's not like that. It's like even the local kirana guys are going to DMarts and buying. And it was a low cost substitute, but I think gradually DMart has also woken up to the fact that as per capita income rises, there is a need to provide an upscale store or upscale shopping experience to many people. So I think gradually they are catching up to that. I believe they had put up a new store in Belapur and New Bombay, and that was much different from the other stores that were in that region. So you could really make up this store happened around what 3-4 years back. So I think they are gradually waking up to the fact that shopping experience and the experience you provide to a customer is also very relevant if you want to get the retail side of it. Long term, I think the way the business is planned in terms of sourcing, etc., first addressed and then the rest of it. I think they are in a unique spot. National presence, how they expand and how much they expand gradually, because I believe the eastern part of the country, they still don't have such a strong presence. It's largely western and some southern presence that they're talking about, and some presence in North India. So I think there is a lot of space that they can extrapolate this idea further into. And the other verticals beyond groceries weren't really doing much. So gradually, if they can scale it up as well, that could be very positive. So long term, it could be a good story to bet on. But again, I think valuations are a bit expensive. So unless and until you want to bet on a 4 to 5 year kind of horizon, it might be difficult for you to make money even out there.
Okay, so that's as far as the entire view on the retail pack is concerned. Also, sir, what's your sense on the entire auto basket? We've been seeing a slew of action now taking place in this space. Maruti jumped to an all-time high level yesterday. We did see a whole host of other stocks. There is buzz around how Tata Motors could be looking at a block deal take place. So that is stock is buzzing in trade today again. Yesterday, we did see the JSW MG alliance come through, and that is going to be again putting spotlight on how the EV space will be looked at going forward. The hybrid space will be looked at from here. They're also looking at creating a Maruti moment, so to speak, and creating 1 million vehicles, etc. How are you looking at really the entire frontline OEM majors of auto space are concerned?
See, across the board in terms of valuations, I cannot perceive much upside for most of the stocks. Tata Motors, we have been bullish for quite some time, maybe 10-15%, another upside from here that can happen any day. That's not a big deal. But I think material upside on most of these stocks is very limited. So when I look at the numbers across the board, I think Ashok Leyland remains probably the only OEM where we are expecting some up move and have a lot of margin of safety in terms of valuations. The stock hasn't done much and even corrected in the recent past. So I think this is a stock I'm looking at for targets of 220. The electric buses is one trigger on the electric side for them. Even the commercial vehicle side, we don't expect much of a slowdown. So that should also help them. And regarding the rest of the pack, I think, there is a lot of evolution that is happening, and particularly the EV and your SUV side, a lot of competition will come in from the likes of Maruti and even the international launches. Even VinFast is aggressively committing to the EV space after the recent government changes. And Tesla would obviously be there. So I think competition would also heat up, and if Maruti is also coming up with new models from the Suzuki stable on the EV side. So that's a upward move trigger for Maruti. But I think broadly in terms of these valuation, Maruti would also be fairly to fully valued at these prices. So unless and until the new model receives a very strong response and strong traction, to continue moving up from here would be difficult. Though initial whatever numbers there are being suggested of the street are very huge in comparison to what they can do to the EV space. So I think yeah, it's a very promising space, but it will need some time, and there is a lot of confusion and a lot of option available to the buyer actually, whether it's a hybrid or an EV or an ICE engine. So I think a lot of complication is there. Even the charging infrastructure they are taking up in their own hands to expand it to a certain level where you don't have charge anxiety. And on the highways, we have seen some improvements on the Gujarat Maharashtra ways and all that. So I think on the major highways, you will have some improvement. But gradually, this will take a bit of time. It's not that it will happen overnight. And in the initial phase, I think as Maruti decks up competition on the SUV side as well as on the electric side, and the international competition also starts kicking in on the EV side. So the current winner, maybe Tata Motors on the EV side, might not be in such a sweet spot for some time. So there could be a lot of competition. Even on the two-wheeler side, I think with Bajaj and Hero coming in, even even TVS could face some challenge on the EV side of the business. And valuations are a tad expensive there also across the three. I think if they have to bet, maybe Hero looks best. But within the whole auto space, I think Ashok Leyland remains the best bet in terms of my understanding.
Okay, and what about auto ancillaries? Are you picking out any fresh? Because some of them have been in fresh move today. Sona BLW is moving. Yesterday it was, Munjal, Shobha, Samvardhan has been constantly moving upwards as well. Any particular top 2 or 3 picks that you have spotted for the long term?
See, Sona BLW would continue to be, as we were just speaking, VinFast is going to come in, Tesla is going to come in. Sona is an auto ancillary service provider to the electric side. That's where they are expanding big time. That's the sunrise place to be in. So I think Sona BLW could benefit. The numbers don't warrant much upside from here, but this is a story with 3, 4 more players coming into their market space to substantially go much higher, and they could ramp up much faster vis-a-vis what they have done over the last, say, 24, 36 months. So that could be one story that could benefit out of this new incumbents coming into the electric space. Uh, Motherson has come down. Samvardhan Motherson, that is, it has already corrected. So I think you can look at it for targets of 140. I think that's a decent bet to have. And one of the two more smaller companies, I think Craftsman Automation is one company we were looking at. It looks like a decent bet, might have decent upside gradually. And a smaller company, Uniparts, largely into tractor semi parts. So I think that could be one company that could do very well because they're expanding the total TAM substantially. So that's a bit long term, 2 to 3 years maybe. So initially,
Which one is that one, sir? I missed the name that you said.
Uniparts.
Uniparts. Okay, got that.
So Samvardhan and Craftsman are well-known names. I think these are two good bets that you could look at.
Okay, fair enough. So that's the view coming in as far as the auto ancillary names are concerned. But let's also discuss the core of the market as well, the banking space. How are you looking at the large cap private banks? Again, there is no sustained move from the large cap private banking space. It's just about 1 or 2 days, and then again the rally fizzles out for most of these majors like ICICI, HDFC, Kotak, Axis. How long are they going to be in this lull period? I mean, and what should investor strategy be? Is that, because this space cannot be ignored completely, and then you're also getting a lot of disappointment for a long time. How should one be really looking at this space?
I think largely I would break it up into two pieces. One is Kotak and HDFC, which have not done really much for their own reasons. Kotak was already expensive, and this overhang of management change was there. Nothing much was happening. And HDFC, obviously, the well-known merger banks are there. And the other three are Axis, IndusInd, and ICICI. I think these three stocks have moved up very well. The way the management transition happened in case of ICICI has been very fruitful. The OPEX numbers have improved substantially over the last 3, 4 years. And that is also reflected in the price and the price to book multiples the stock is getting. From here on, whether more such improvements should happen on ICICI, I think that's a tough call to make. But for all these three banks, I think a lot of re-rating has happened over the last 1.5, 2 years. So for most of them from here on, I think IndusInd, I don't expect much upside from these valuations. But for ICICI and Axis, there is a possibility that they trade at median kind of valuations. There is a 10 to 20% upside on both these banks. And as far as HDFC and Kotak are confirmed, they remain my top picks. I think the type of change in the banking behavior within the organization that Kotak is trying to rope in, that should fructify into very fruitful results over the next 1.5, 2 years. And gradually, as those numbers start playing out, I think Kotak could be a very good re-rating candidate over the next 1.5 years, or even 2 years. HDFC Bank also, I think, even today, this RBI denied the permission to have those infra bonds as infra category. So that's a CRR, SLR hit on this 1 lakh crore bond portfolio, most probably. So they will not be able to use it as CRR and SLR. So I think the merger overhang is still creating pangs here and there. But overall, I think most of the synergies out of the merger should play out. They have a very small common pool between both the companies. And if they start synergizing that and getting benefit out of that cross sales and everything triggering in, I think this would be a very smart play to have the type of branch additions they are happening. So I'm very bullish on HDFC Bank. I think we are looking at targets to start with of around 1900, 2000 on the stock. And once a larger company starts moving out, the size advantage is already there. I don't think larger institutions would shy away from buying into HDFC Bank. So I think that would be a very good story to watch out. The India story has to connect with it. So I think I'm very bullish on HDFC Bank for initial targets of 1900, 2000, and take it from there on. And Kotak also should be a very smart re-rating candidate over the next, 2.5 years. The only thing is which quarter the numbers start showing up, that will be something the markets will connect to. But I'm very sure that these two banks will turn it around in a very smart fashion.
Okay. Right, so we are 4 minutes away from the day's close, and it looks like again we are protecting 22,000 on the closing level, and that will be something that will be watched out for. And the markets panned out to be, pretty resilient despite all the volatility that we saw through the day as well. It being the weekly expiry and the penultimate expiry for FY, the current financial year, that's FY24. Let's again look at some of the mid-cap names that are actually doing very well. We did talk about names like CG Power and Sona BLW that were up and about, and also PFC REC. They're all buzzing upwards of 5% to even 9% odd. Polycab India is moving up 5.5% higher. L&T Finance Holdings 5% up. L&T Technology Services is up in trade. FSN E-Commerce Ventures, Nykaa's parent, is up by 4.2%. You have Piramal Enterprises that's moving up. Tube Investments is up and about 4% higher. Navin Fluorine, that's another one. LIC Housing Finance and Corporate Container Corp, that's the other one that's moving up in trade as far as the big mid-cap movers are concerned for now. Do you also track Nykaa, for example, sir? And could you tell us your view here, since you're talking about how Zomato looks a little overstretched now, despite the fantastic turnaround that's taken place? From the other internet basket, are you looking at some other names, and Nykaa especially?
Yeah, even Nykaa looks a bit stretched to me in terms of the numbers. The two other very positive things are, if you're a long-term investor into Nykaa, I think the second generation is very well prepared to look at the business. The product basket is very good, even if you look at Honasa for that matter. So I think Nykaa has a very good product basket in place. And I think this is a very vast market that they can cater to. But the speed at which prices have moved up, the business to play catch up to these numbers would be a bit of a challenge. Even the second generation, I've heard interviews of the second generation also who are going to take up the business forward. And I think they are very well connected to the business and they understand the business nitty-gritties very well. So those are two very positive. So if you're looking at an idea which you want to just buy and hold on for the next, decade or so and expect multi-decadal returns out of that, then Nykaa does make the cut. But if you're looking at an idea that will serve your requirement for the next 2 to 3 years, I think the prices are a bit exorbitant, so it will be a bit difficult for you to do that. So I think in that term, I would be more happy betting on something like a Honasa. So there, the product basket, new products that are still to contribute to the huge basket. I think similar number of products that have already been successful. So that could be one company which could benefit substantially, and the numbers would not be too stretched to be not supportive of the improvement in the numbers. So I think as improvement comes in the numbers, Honasa could be something that could give you some price appreciation, even in a 2 to 3 year horizon. And I think the product basket are very good for both these companies. So they have created a niche for themselves within the market. That should play out very well. Nika might not give you much in a 2 to 3 year horizon, but certainly a bet that you want to put in your basket if you have a 8 to 10 year kind of horizon.
Okay, that's the view coming in on the new age tech stocks too. Well, many thanks, Mr. Awasthi, for being with us on this special edition and sharing with us an insight across the board in markets into various sectors and stocks and how to navigate through into the markets right now. Always a pleasure to host you with us on Business Today, and we hope to see you back again. Until then, season's greetings and happy Holi to you. And may you and your family as well as your team members have the best of this festival, and let the brightness of this festival spread across to your lives and to the portfolios of the people you handle with.
Thank you.
All right, let's quickly look at how the markets are shutting shop then. 175 points of an uptick on the Nifty. 22,014 is the level at which we are ending at. So 0.8%, a very solid move that we saw on the markets towards the end of the day. A very smart recovery from the day's low point too. At one point of time, we did see the market slipping away, but the bulls have managed to actually pull up back again. The Nifty Bank about 0.8%, also in tow with the Nifty. 46,677 is the move at which is the level at which the Nifty Banks ended at. 367 points of an upside. Sectorally, the action was pretty strong across the board. All the sectors have managed to end in through the green in trade today, led by the strong move on the realty space. Small caps and mid caps have bounced back pretty sharply. 2.5% higher is what they're ending the day with. Metals shown brightly. PSU banks, consumer durables, auto space, oil and gas, the other spaces that were very, very strong and moved upwards of 1% in trade today. The top movers on the Nifty included names like NTPC that ended with the gains of 3.6%, BPCL, Power Grid, Tata Steel, Coal India, IndusInd Bank and Tata Motors, the top movers on the Nifty today. So the power space, the metal space, energy basket, a whole host of these commodity-based stocks are actually seen moving in trade, along with slight upticks being seen on banking counters, very select of them. IndusInd Bank moved up 3% in trade, along with L&T from the infra basket, Wipro from the IT basket. Select names coming in. ITC jumped again. 421 was the level at which it ended at. But on the downside, about 4, 5, 6 stocks that dragged in trade as far as the Nifty is concerned. Bharti Airtel saw profit booking 0.9% lower in trade. HDFC Life about 0.6% lower. ONGC, Maruti, ICICI Bank and Asian Paints all down in trade. But PSU stocks bounced back pretty sharply. PFC, REC were talk of the town, 6.5 to 7% up move. BHEL, BEL, HAL, defense majors coming back into action too. Oil India, Steel Authority, Life Insurance Corporation, Container Corporation of India, IRCTC also showing some kind of a smart bounce, 3.5% higher in trade. Among the future movers, you did have RBL Bank as a strong mover, 7.5% higher. Hindustan Copper from the steel space did move up very strongly. But you did hear the, our expert talk about how valuations look stretched. REC PFC, Muthoot Finance and GMR Airports Infra, that also showed a smart move towards the end of the session as well. So that's as far as the markets are concerned for the day, as far as the expiry session is concerned. As we look tomorrow, we will have to see whether this move will be sustained, because now we will be heading into a truncated week, wherein Monday will be a holiday for the markets on account of Holi, and then Friday will be off on the account of Good Friday as well. So we'll just be heading into a 3-day work week next week. So how are the markets going to be positioned? Are people going to pull up all their money, profit booking towards the end of the fiscal year? Will that be, causing some more volatile moves? Is something that we will keep a keen eye on. Until then, you stay with us on Business Today TV as action continues on your screens.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunitions, mining, airlines, and many other sectors.
स्टॉक मार्केट्स बहुत वॉलेटाइल हैं और अगर आप भी इसी तरीके से कंफ्यूज्ड हैं कि किस तरीके से अपना पोर्टफोलियो बनाया जाए इस वॉलेटाइल मार्केट में, तो आप सही जगह पर आएं। हेलो एंड वेलकम, यू आर वाचिंग